Now it's time for a very special moment. We're very honored to have with us the chairperson of the EIOPA, the European Insurance and Occupational Pensions Authority, leading the authority since September 2021. She's also a member of the European Systemic Risk Board Steering Committee and the IAS Executive Committee, where she champions the International Association of Insurance Supervisors FinTech Forum. Before her role at EIOPA, she was Division Director of Insurance Supervision at the Nederlandse Bank, where she played a key role in developing Solvency II and held various leadership positions. We are particularly happy to have her here live today because, as I remember in Copenhagen, she was virtual. So it's a great pleasure to have her actually with us today. She will chart the landscape of the important trends in reinsurance for corporate customers of the industry, for professional risk managers. So please welcome, ladies and gentlemen, Petra Hielkema. Please.
I'll try to stay here. So good afternoon, everyone, and it's a pleasure to be here. It's not often that you are in such good company with people that are just very easy talking about risk, etc. For us, that's normal, but I still remember coming home from a party at the Dutch Central Bank with all my risk managing and actuarial friends, and my husband said, Petra, mitigation, is that a word you use a lot? He noticed. So, but here that is an easy word, and today what I want to do as the chairperson of EIOPA, the European Insurance and Occupational Pensions Authority in Europe, I want to take you along, maybe not completely on the theme of risk revolution. I hope you appreciate that as a supervisor we try to stick with evolutions. We try to avoid revolutions, but we stand ready if we need to deal with it, and we might actually have to. But let's look at that. Let's look what's happening. And I think some of the previous speakers, and didn't they do an excellent job? I think they alluded to all the changes we see, the pace at which that is happening, and the need to deal with that. And be it risk supervisors, risk managers, industry representatives, but also policymakers, we have to do that. And I think the first question is, why do we do that? Why do you want insurance? Why do people take insurance? It's to have peace of mind. You are conscious of the risks, you try to manage those, and through insurance you are able to do that, and then you can park it, and you can move on with the business. And that is what, if insurance is done well for policyholders and businesses, that is what we do. We facilitate business to run as good as they can, while we also give a peace of mind to society. Now, that has become more challenging with all the changes that we see happening in the world, from climate change to cyber risk. We see that the risks that are coming are more complex, they're interconnected, and the speed is rapidly evolving. There's a transcension of the borders between certain areas. There's a cascading that you move from one into another. At EIOPA, we're now drafting a paper on biodiversity, focusing on risk, but even if you only focus on the risk, before you know, you end up in net cat risk, and then you end up in risk to other policyholders, or maybe property risk. And if you are not careful, then the world is coming to an end in the paper on biodiversity risk. So we need to really focus also on what we mean if we identify a certain risk, recognizing that that is sometimes not easy. So a certain rethinking of reality in that perspective when we make our narratives and scenarios is important. Now, how can EIOPA help with that? How can supervisors, how do we look into that? What can you hear from us? And I hope I'll leave some time for questions. That was the idea, if that is a need. But I think as a whole what we see, one key priority, and this is the moment to have priorities. We have a new European Commission coming in. They are prepping the Commissioner now for her hearings. They will then kick off the new program. What should be the priority? Let's say not more new regulation. We still are working on the 10 new or revised acts that were rolled out in the previous part, but we do need to address the new risks, and we need to address protection gaps. Protection gaps will be a key topic for us, and which gaps are there? It's the pension gap. I talked about that this morning at the pension conference, also here in Madrid. Cyber risk, I had a panel. We also have NatCat, natural catastrophe, and health. And health, I think, is only starting to appear. But again here, climate change, NatCat risk, it will bring different diseases to EU and to the continent of Europe, and we will have to deal with that. We see destructive impact of NatCat events. We need to deal with that. And this is a global problem. And that means that also reinsurers will have to deal with it, because full global diversification may become difficult or more difficult. So what can we do in this context? My first answer is always data collection. We need data. We need to understand what it is. You would appreciate that. You cannot assess the risk if you do not have the data. So data collection, getting it in as supervisors, but also sharing that back is important. I'll get back to that later. We also need to raise consumer awareness. I try to constantly explain this. You can say as a consumer, well, government should deal with it. And then government says, well, the market should deal with this. And the market says, okay, we can insure this, but we will exclude the other part. And then it ends up with the consumer, and through the consumer with the government anyway. The risks that are currently happening in our societies will not go away because we try to push them to another player in the ecosystem. They're here, and the only way to deal with them is to adapt, mitigate, and the remainder insure or find a way forward. When it comes to risk, which may be most uninsurable, here we also need to talk about public-private partnerships. So that will be part of our agenda. And that is happening. In the context of NatCat risk, we already have a good climate resilience dialogue. FERMA was there, EIOPA was there. We delivered the report, but we're now looking into particularly buildings. How vulnerable is any kind of real estate at the moment for climate change? And if it is vulnerable for climate change, how can we adapt, mitigate, and can you ensure that, or will it lose value? And from the Commission to individual banks, but also G20, IMF, EIOPA is talking to many parties, asking exactly this question. What is the risk of losses on real estate because of climate change? And how do we manage that? So this is something to also be mindful of. Now, if we look then at the other gap that is very relevant also here in this audience, of course, is the cyber risk gap. And more companies, they rely on infrastructure, digital, they rely on the cloud. Even the insurance sector, 80% of the insurance sector is in the cloud as it today. And this is, of course, accelerating. It was mentioned before, and it will continue. It will benefit us, but it will also increase the risk. Now, CrowdStrike is always referred to, but let's be honest, I have not seen CrowdStrike. It's now the opening of many speeches, we can learn some lessons, but it hasn't been the big event that now has put the cyber gap on top of the agenda of politicians. So still here we need to work further to get the attention on how we're going to address cyber risk for larger companies, although they can still get quite enough, a certain part of the insurance market. But SMEs, EIOPA did a survey where we asked SMEs in Europe, would you like cyber insurance? Can you get it? And the demand is so much higher than what is actually available in the market. Cyber is, of course, a twofold challenge. On the one hand, insurers need to be resilient themselves, and on the other hand, underwriting cyber risk is also important. Now, on the resilience itself, I really think that a big step forward is the Digital Operational Resilience Act, DORA. And every time I say that word, I see the Little Explorer. I do hear the song. But this, of course, is about operational resilience. And the simple way to explain what DORA will do is threefold. First of all, it will set the rules on what you need to do for IT risk. but that should not be completely different from what you do today, because we already issued guidance on that. But moreover, it sets also rules for how cloud providers, critical third parties should deal with the risk, and we will oversee that. And the big difference here is that until now, if we supervise the cloud or IT services, we go from the licensed entity through all the other outsourcing, and we end up in the cloud as supervisors. On the 17th of January next year, when DORA starts, we will actually knock on the door of the cloud provider and enter through that door to start our oversight. EU oversight, by the way. It's organized at the EU level, major task, but I think it helps to become more resilient, and testing. So I think on that end we've done a lot. The question is, how much can we do on the cyber underwriting? And here you see a pattern that we've seen with more gaps. So the pattern that we've seen is that, first of all, companies, but also insurers start to realize that there's a lot of silent cyber in the policies. Then they tend to first exclude it. If there's less data, little understanding of risk, you can't price the risk, you take the risk out. It's very simple. Then there is an increase in demand because people want that insurance, and then slowly data start coming in, and you see slowly some availability, but hopefully that is growing. It is growing, but it is not growing as fast as demand is. So EIOPA has come out with a reporting template now for cyber risk underwriting, and we can now finally, it's a new template, use those data to see how cyber is underwritten, how much is happening, and we can also see through the reporting of cyber risk events, how much events are happening. And why is this relevant? I'll get back to that when I discuss our NetCat dashboard, because I want to talk, and I said that to you, a bit more about data. Data is an essential factor to monitor risks, and with more data available and AI available, we probably can do and see more, but it starts with having good data to begin with. And supervisors here have a particular predicament, because risk-based supervision isn't possible without sufficient data. We can get a lot of data at the same time. There's a lot of data reported to us. So one of our strategic priorities, besides the protection gaps, is actually to be a data hub that is not only collecting, but that is also sharing back. And you can find that on our website. We already have some open source tools and initiatives, particularly currently related to climate related risk, but I would love, when we have more data, to get also to cyber. And we are also improving access to catastrophe data, so that when it is available, it will be more easy for an insurance sector to insure. What we also do is we produce dashboards per member state, where we say, this is the exposure you currently have for NetCat risk, and this is how much you have insured. 75% currently not insured. That's a problem. We need to work on that. But having a dashboard that measures risk and compares that to level of insurance, and we should be able to start building that for cyber, will benefit a dialogue in which we can create the urgency of what we need, because I think there's a lot more cyber events happening than we are currently aware of, and I know for a fact that a lot is not insured. We also think it is useful to have unique European event identifiers, so then we can also have a good comparison on what are the contributions to a certain event, also a cyber event, from the public and from the private. Because after the event there's always losses, and losses are covered. Some come from individuals, some come from insurers, some come from the state. But to monitor that better will also facilitate a discussion, how then can we make them more efficient? I go back to the fact that I said the risks that we have, except if we mitigate and reduce them, will stay the same or grow and just land with us. And then it's who's getting which part of the damages to deal with, but that is the reality. So making sure we can do that in a way that we understand who has the risk and who's going to, and what is the most efficient way to deal with that, that is the dialogue we need to start having. Now, one other aspect of data, and this is something we do work on also as EIOPA, is that the more data you have, the better you can see the risk, and new data flows, new analytics. But we need to be mindful that mutualization is an important part of risk management. You have a bunch of data and then you divide more or less the losses. But the more specific, the more granular you get, the more the question raises if some people are going to be left completely out. And this is where you now see politicians and policymakers respond in several discussions, and they try to step in. And here EIOPA will work on policy options, on how to approach a discussion where you would say on the one hand we need more data to assess the risks, but on the other hand there is a point, maybe, possibly, where the public authorities will intervene in how much data can be used to price risks, to avoid exclusion or to avoid such demutualization that some risks are no longer being insured for. That's not an easy discussion, but it is an important one. Why is it also not an easy discussion? Because a lot of that discussion is we have to have with different parts of also the policymakers than we were used to before. So not a revolution, but definitely an evolution, is that also as EIOPA, we do not only deal anymore with a Ministry of Finance or a DG FISMA in Brussels or the Econ Committee in the Parliament. We deal with DG Climate, we deal with DG Health, we deal with the DG Employment, we deal with the DG that does digital. Connect, it's called Connect, because they are drafting legislations on data that will impact also on insurance and will also impact on, well, what data insurers can use, and with that how much they can insure for. Now, finally, what does that mean for reinsurance? The big players on the one end and for captives on the other end, because interestingly enough that audience is always the very big or the really small ones. Let me start with reinsurance. I think reinsurance is an excellent way to spread risks globally, and it's a global activity. It's very important, and we support that as EIOPA, and we treat reinsurance as insurance under Solvency II. What is, however, important when we look at reinsurance is that we have a level playing field also within EIOPA for certain creativity, shall I call it, in insurance treaties. In my opinion, what we've seen is now that we're used to Solvency II, we know how Solvency II works, and supervisors know what to look for in Solvency II. We've seen some creativity in insurance that we are not happy with, let's put it like that, move to reinsurance contracts. Not the majority, but some. And this is what we look a bit more at, and then we think about sliding scales for premium, we think about asset-intensive reinsurance, and we think about mass lapse. And here you can find some advice. That advice should not be read as EIOPA having concerns about reinsurance. It should be read as EIOPA wanting the 27 supervisors in the EU to deal with that risk in the same way. Then on captives and proportionality. So what we see is that the use of captives in multinationals is actually growing. We see that pretty much every Fortune 500 company has a captive these days. So if you don't have one yet, maybe you need to, maybe you're missing out on something. No, but it's up to you. But what we also see is that for commercial insurance, already 25% is insured through a captive. Now, on the one hand, I think that is efficiency. On the other hand, it may also be a sign of uninsurability elsewhere. But in any case, it is a trend that we see. And that's why we issued an opinion on captives. In principle, they're insurers, they're small insurers, they're often not complex, and they're simple, and that makes you a low-risk insurer. And that's important in Solvency II. We do not only look at small, we look at risk and complexity, and if that is all small, then you get a very proportionate treatment, and that treatment will actually be even more proportionate once the new Solvency II is implemented. But we also see that captives are more moving towards cyber risk, more complex, and moving also towards reinsurance. And this is where we will carefully see if you are really looking in the proper way at the risk. And for those who really want the most details, I go to cash pooling arrangements, and that is the specific part where we feel there might still be actual more risk than small risk in a captive. So you need to recognize and classify the assets and liabilities description in your Solvency II balance sheet according to the economic economic substance of that pooling arrangement. If you do that well, if you apply the right SCR, capital requirements, and if you also do the prudent principle well, then also cash pooling arrangements can be part of your captive and can also be supervised proportionate. But it starts from that first step that you make sure that you have the recognition and the classification correct, and that there is also no arbitrage in the classification of the assets and liabilities within your company. That's a question we get a lot. It's quite technical, so for those who missed it, please ignore. But for those who are actually looking into this specificity, this is, I think, the most important part of the opinion we published, and then I hope I saved you a lot of reading in that area. Finally, to bring it home, all this is relevant and important in a time that insurers and pension funds are seen, being the long-term investors that they are, as part of the solution for the need of Europe to find more capital to invest in the transition, long-term capital. And here particularly the idea of creating more retail investors through savings and then making sure they invest in the EU economy, I think will be very much part of the new agenda of the European Commission. EIOPA is positive looking at that. Pension gap, I mentioned it, so more pension savings would be good, as long as it's safe, as long as it's fair value for the consumer, as long as it's a simple product. We truly believe that really ensure most of the consumers in the EU, but also most of the SMEs in the EU, I think just need a simple, clear, easy accessible product that delivers on what you expect you will get and that gives you value for money. And then I think that outside of that majority, there's a lot more other interesting things you can do as an industry to sell that to them, but I think the majority of business and person in the EU needs a product that's quite simple and that therefore can scale, should therefore be at a low cost, but can really help. So a European label for a product for pensions, but maybe also for cyber, and therefore generating also the potential to scale cross-border. An insurer only needs one license and sells then in 27 markets, can do that via a website, why not? I think that is a way to go, to see that you can create the mass to also deal with cyber risk, particularly for SMEs, as long as you really offer value. Now, this is just some highlights of what I think is on my agenda, but I also hope is on the agenda of the new Commission. I hope that mostly means also that we will be focusing on implementing everything that so far has been created in the last 5 years of the former Commission, making that work in a convergent way, and maybe ticking out those items that maybe do need some review just to make things better. But try to also pace a little bit, no revolution, in the number of new legislative acts. That's a hope. I'm not holding the pen in Brussels, but I think a good eye on the implementation would be helpful. And with that, I'll stop. Thank you, Tiffen, for having me, and I hope that gives a bit of an idea.
Thank you very much indeed, Petra, for that very enlightening talk, especially coming from your own experience. And it's nice to see you in person here. I'm sure you're going to stay with us because we have now a debate with some of the leading figures in the insurance company. But once again, thank you very much indeed to Petra. A big round of applause. Thank you.